For the second time in 137 years, AT&T lowered its dividend. That was a gut punch for a lot of dividend investors. A lot of people that are relying upon the dividends are seeing their dividends cut in half for AT&T. Well, you may be asking yourself, well, the title of this show that I saw was supposed to be Verizon. Why the heck are we talking about AT&T? The two companies are really inseparable when we're talking about investments. And that's what we're going to get into today when we're talking about the potential for Verizon going forward. So let's go ahead and begin in today with today's Learning Lab. Hey, everybody. My name is Van Richards. I'm a financial advisor, and I'm here to help you grow your financial knowledge so that you can be in control of your financial future. And today, we're talking about Verizon Communications. We're also going to be talking about AT&T and T-Mobile because those three companies are the three dominant wireless companies that exist. Now, the first thing that we need to do when we're talking about any particular investment is what? We need to look at what the company does. Now, if I'm talking about AT&T, the question may be, well, are they a media company? Are they a wireless company? Are they a movie company? What are they? But the question when we're talking about AT&T and Verizon changes just a little bit when we're looking at Verizon in itself, because Verizon's business really is pretty simple. The company is a wireless company. They really have three different divisions. About 70% of their operations is in the wireless business, but they also have a fixed line communication company, which is primarily in the Northeast part of the United States. They also have online media and advertising. We'll get into that just a little bit more as we go on today. But we want to really start by understanding what Verizon does. Their primary focus is building and maintaining their wireless business. And they're doing that by supporting it by expanding fiber into major metropolitan areas. And that business is growing also in other areas. They're developing also their wireless broadband and their edge computing business as well. Now, in understanding what the company does and what their potential is going to have for the future, we want to look at some fundamentals of the company. And I use a technique that I've utilized for a long time. And if those of you that have listened to me before, you know what this is. I call it the SEC method, where we're looking at the stability, the earnings, and the competitiveness of the company. When we're looking at the stability of Verizon, we have to compare it with the other two companies that is competing with, that is AT&T and T-Mobile. And the size of the company has a lot to do with its potential for growth toward the future. Verizon right now is at about $233.78 billion. AT&T comes in a close second at $171.96 billion, and T-Mobile comes down at third, $151.08 billion. Now, in looking at the fundamentals of the company and the stability, one of the most important things that you can do is look at the competitive edge that that company has. Warren Buffett has a term that he uses, which is called the company's moat. What is the company's moat? The moat is that invisible barrier that's between the company and its competitors. And really, when we look at Verizon and we compare it to T-Mobile and to AT&T, they have a narrow moat, a narrow edge of competitiveness. And it's really based on two factors, and those factors are intertwined. The first is going to be the cost advantage of the company, and that is pushed forward by the size of the company in itself. They grew even more. That is, Verizon grew even more recently when they went through an acquisition of Track Mobile. And what that does as far as connections of the company is it expands it even more. Right now, Verizon stands at 116.23 million paid and post connections compared to T-Mobile, which is actually in second. I thought that it was AT&T, but it's actually T-Mobile at 90.25 million. And then AT&T comes in at third at 85.42 million. That cost advantage is growing even more when we look at the scale of efficiency, which is in there. Now, what do I mean by the scale of efficiency? What I mean is that Verizon has put a lot of money into growing its business in the 5G area. And what that's doing is it's going to be a double-edged sword. When we talk about some of the bearish characteristics of Verizon in a moment, you'll see what I mean. They've invested a whole lot of money into it, and they're looking for a great deal of return. And it's really the potential that is seen by a lot of investors going forward. Now, we understand what the stability is. We know that they have a competitive edge because of their size, but we also have to now look at the earnings to see if the earnings are going to be able to support that stability. So what do? Well, I'm going to make the screen just a little bit bigger. For those of you that are just listening today, what I want to do is describe to you the graph that I'm showing you. This is a graph that shows the earnings history of Verizon from 2015 until 2021. And it really looks like the Alps. It's a mountain range that goes up and goes down all over the place. They had a severe impact to the value and the earnings into 2019 and 2020. I wonder why that was. I think that's something called a pandemic. And then recently they've seen some falls too because of a reemergence, I believe, of the pandemic and what's going on generally in the economy in the United States. But as we go forward and we look at the intricacies and we look at the details of that, we see that the net income of Verizon is very close to AT&T, and then T-Mobile comes in actually quite a bit below that. Verizon is at about $22.07 billion in net income. AT&T is at $20.8 billion, and then T-Mobile is at $3.06 billion. Now, as far as return on assets, here's an estimate that I want to report on. When we're looking at the net income return on assets for Verizon, it's at about $6.33 billion. That's about 2% higher than AT&T at $4.49 billion. Now, let's just keep going on too and look at the estimates going into the coming year. When we look at the potential growth based on the wireless industry, we see that the return on capital for Verizon is projected to be at around 16 to 18%. AT&T comes in below that. Why is it so much bigger? It's because of the size of the company, their efficiency is greater, and they're having greater profits based on that. And there's really not numbers available that I have that are, I would think, dependable for T-Mobile, so I'm not going to talk about that. Now, one thing that we're talking about going forward is what's the potential for Verizon. What we're going to see in those numbers that I just showed to you and talked to you about is they're going to shrink. Why is that going to be? Because they're putting so much emphasis into investing into the C-band. They're investing into 5G a great deal. So what most experts are saying is that you can expect the growth on assets to be decreased by about 4%. So that 16 to 18% number that we saw for the past year for the growth on capital will go down to about 14% to, let's say, 12%. It'll still be right around what AT&T is, and it'll be a little bit better. T-Mobile, again, we don't have numbers to report on, but all of that is going to support the actual dividends. Now, we all love dividends, and I think that the idea on dividends in itself for this particular stock is pretty dependable. Now, we can't predict anything, but when we're looking at what the history has been for Verizon, it's been pretty good. The dividend yield is at around 4.8%, and the increased track record has been about 18 years. It's increased the growth by about let me get that number right. The 3-year dividend growth has increased by about 6.32%, and the dividend payout ratio is only at about half their earnings at about 48.03%. Now, that number is really important to pay attention to because look at it compared to AT&T. Now, at the very beginning, I told you that AT&T is going to go through a dividend cut. And the reason is going to be they're going to be spinning off their Warner Media division. It'll actually be called Discovery Warner Media. That company probably is not going to pay any dividends. Right now, AT&T is paying a dividend of about 8.64%. That's going to be cut in about half. The track record is kind of questionable. When you look at some of the history, there's some history that says that it's a much longer track record, and they were included in the aristocrats for dividend, the dividend aristocrats for the S&P 500. But from the research that I have, and I'll put this in the show notes later today, there's an article from the LA Times from the year 2000, and it reports on the dividend cut that occurred at that point in time. Now, I want to read to you something really interesting that was in that article, and this is actually from the year 2000. This is a quote from the article, which is by Elizabeth Douglas in the Los Angeles Times in 2000, in December of 2000. And it says, this is a part from it. It says, at the time, AT&T officials promised not to load the cash-generating consumer business with debt or burden the growth-oriented cable and wireless units with dividend responsibilities. Oh my gosh, how time has changed. Look at the spending spree that AT&T went on over the past 10 years. Now they're trying to wind all that down and actually to make profits. When we get to the actual competitiveness and we look at the spaghetti graph of what's happened with the returns, you're going to see that it's not really favorable from that standpoint. The dividend growth has been less over the past 3 years at about 4%. Here's the big difference, friends. The dividend payout ratio at the 8% level is at about 75% compared to Verizon, who's only paying about half of their earnings out. So they've got a lot more in reserve. AT&T is running along the edge, which makes it very difficult to run that particular company in itself. Now, when they spin off, after they do that, the dividend yield will go down to about 4.61%. And some of you may be, if you're a dividend investor in AT&T, you may be asking yourself, well, what do I do now? I've got this stock from Discovery Warner Media that pays no dividends. And then I've got another stock over here that's paying whatever, the 4.61%. Well, let me tell you what you might want to consider if you want dividends. Sell your Discovery Warner Media and reinvest it back in AT&T. Now, there may be some tax implications. We'll talk about that in just a little bit. Not a lot, but we'll talk about it just a little bit as we go forward. The value in itself for AT&T, and you're going to see how it compares to Verizon in a moment. From 2016, the value's down about a third. So if you actually sell because of taxes and you think of taxes in itself, you're not going to have a lot because you don't have a lot of profit. Now, if you're wondering, should I sell it or not? I have a resource for you that I want to give to you. I created a very short lesson, and it's called When to Sell a Dividend Stock.com. If you go over there, it's a free access. It's free. The lesson is free. And I give you a lot of pointers on some of the best information on how to know when to sell a dividend stock. And I think that's a resource that you could use, especially if you're looking at it from the perspective of if you are an AT&T dividend investor. Okay, so we've looked at the stability. We looked at the earnings. Now let's get into talking about the competitiveness of the company. When we talk about competitiveness, the very first thing to do is actually just look at what's happened to the value. Now, right now, I've thrown up a spaghetti graph. Now, spaghetti graph is just what I said. It looks at the value that's gone on in the past year. And we can see Verizon compared to AT&T and T-Mobile really hasn't done a whole lot. In the past 12 months, Verizon is only up 1.2%. Now, if you were a T-Mobile investor, you're actually down about 7.4%. And you all who are out there that are AT&T investors, you're down about 10.21%. Now, let's go back about 3 years. Go back a little bit more recently from that standpoint. Over the last 3 years, Verizon has excelled. They're ahead about 37.24% compared to AT&T, which is at negative 0.1%, negative 20% over the past 3 years. Now, if you are a growth investor and you want a wireless company, you're probably going to be investing in T-Mobile. They don't pay a dividend, but their growth has been better than either of those companies. Their growth over the past 3 years has been up 97.1%, which is actually not too bad. Now, one of the most important things that we want to do is we want to look at the pros and the cons of these different companies. What are the bullish characteristics and what are the bearish characteristics? And the bullish is, What's the positive things which are going to be happening that could impact the value of Verizon going forward? The most positive thing that they have going for them is their track record. Now, I know the past performance of an investment can't be a guarantee of the future results, but let's look at it from a management standpoint. Verizon's management has been laser focused on increasing their wireless business, and that has been a significant advantage to them. They've continued to invest in their into their fiber network and their 5G technology. They have really the broadest coverage in the entire industry, and they also have a very strong customer reputation. I am a Verizon customer. I'm a Verizon shareholder, and I like the company in itself. Now, I can't tell you that that would be right for you, but I can tell you for me, it's the right thing to do. Looking a little bit further at some of the bullish characteristics, well, we've talked about this all along. The fact is that they have a big efficiency benefit because they have the largest customer base in the entire United States. That gives them a really big edge over their competitors. Now, let's step back for just a minute because we know that everything cannot be positive about any particular company. So let's look at some of the negatives that are going on. The development of the wireless technology is really getting cheaper and cheaper as time goes by. And that is evidenced by what's going on with T-Mobile. If you look at how recently that company has grown, they're a competitor that needs to be paid attention to. Another thing is that's a big problem for Verizon right now is they do have a landline business, a fixed line business in the Northeast, and it's been a problem for them. It's probably one of those businesses that they can't spin off. They've tried it before with other different companies. It hasn't been successful for the companies that have spun off. They've gone through about 3 different spinoffs in the past years, and every company that they've spun off has gone bankrupt. So I don't think there's a lot of track record to go with as far as spinning this company off because there's nobody that wants to buy it. So you have to be careful of that because about, let's say 20% of the company's assets are in that fixed line business. Now, Verizon's balance sheet also is highly leveraged. When we compare it with other companies and we look at a statistic called their debt equity ratio, it's double of what the industries are in general. The debt equity ratio for all companies is right at about 1.01%. We see, not a percent, forgive me on that. It's just a number. It's 1.01. But the debt equity ratio for Verizon is at 2.17. Compare that to AT&T, and this is before their spinoff. This number is probably going to get better because they're going to spin off all their debt to the Discovery Warner Media Company. AT&T right now is at about 1.08, and T-Mobile is a little bit higher at about 1.4. That burden of debt could be a problem with them going forward. But what if all that investment in the 5G network pays off? That's what you want to look at. Now, let's see what some of the different analysts are saying about Verizon right now. One of my favorite companies to look at is Morningstar. Morningstar looks at this company, and right now, their close on Friday, let me get this number real quick for you from the standpoint of value. Friday, the value was at 53.31. Today, it's down a little bit at 52.92. So what Morningstar is saying is that this company's fair market value, Verizon's fair market value, is $59. Based on Friday's close, that means that this company is selling at a discount at about 9.64%. That puts them at a 4-star level. And I want to caution you, though, about this star level thing. Stars are not the same with stocks as they are with mutual funds. Mutual funds, there's a lot more information that goes into giving a company stars. Morningstar primarily gives their star ratings based on the value of the company. So if we go down further than 53, we go to $50 or $49, it's probably going to be called a 5-star fund. If it goes up, let's say to $60 or $70, it's going to be more like a 2-star or 1-star fund. Stock. Now, what are some of the analysts saying about this company? There are a lot of analysts covering Verizon. Right now, and I want to make this just a little bit bigger for you, for those of you who are watching, so you don't have to strain your eyes too much. Out of 17 of the top analysts that are reporting on Verizon Communications, we see that 4 of them are saying that this is a strong buy. Only 2 of them are saying it's a moderate buy. But what we're going to see is that 11 of the 17 analysts are saying that it's a hold. Now, based on the reporting that I have from this information, it puts it at a moderate buy, but a lot of the rating companies are really putting this as a hold. Okay. I really think it's more of a hold. It's not a moderate buy because there's too many things that are going on right now. When we look at what all the analysts are saying, there were so many analysts that were reporting on this that it was very difficult, very difficult to look at an average. So this is the best way that I did it. I took the top 12 analysts that were reporting. That's Credit Suisse, Citicorp, Muzo, UBS Group, Bank of America. The list goes on. You can see it if you're looking at the screen. The best thing to do is look at what the average is. The average expectation for this company, remember they're selling at about 53 now. The average expectation is at around $58. That's what most of the analysts are looking at as a high for this company. The low, pretty much in the same range from that standpoint. There's not much of a difference from that viewpoint. So I think that kind of gives you a little bit of an understanding of how the stability, the earnings, and the competitiveness will work for this. If you are interested in it, what I encourage you to do, if you want to look at it from your perspective, you have to look at it why you want to buy this particular stock. Do you want it as a growth investor or do you want it as a dividend investor? If you're a dividend investor, I think it's a good investment for you to look at. If you're a growth investor, I'm not going to tell you not to buy it because I own it, but I think that you need to look at maybe something else because the growth potential right now for Verizon is going to be really based on its dividends. Their emphasis on growth is not the same as it is with a company like T-Mobile. The entire industry is, the margins are fairly thin, so there's not as much profit as there is in some other technology areas. Maybe if we're looking at like an Apple or a Tesla or something like that. So you have to take it from that perspective. But if you are a dividend investor, I think that this is a good stock for you to consider. But you have to also consider other stocks in there. You can't just say, oh, you're going to own one stock. The people out there that own just AT&T and were relying upon that dividend for their income are going to be really disappointed in the months that are coming. They may be able to increase their dividends by taking their stock from Discovery Warner Media and reinvesting it, but it's still not going to be back to the way it was. If they reinvested, it's probably going to increase their overall investment dividend to about 6%. So that gives you a little bit of an idea of my expectations of what this company will have toward the future. Now, remember, the very most important question that you can ask yourself is, will this stock fit me in my goals? If you are an owner in this company, the question is going to be, when should I sell it? So when you want to ask yourself that question, I want to encourage you to use the resource that I make available for you called whentoselladividendstock.com. Go over to that site. It'll give you a lot of good information on what you should look at if you are a holder of a dividend stock and you think you need to sell it. So hopefully that'll help you. Thank you, friends, for your information, for your help today in asking questions. Oh, I got one question that I did have that came up today. I wanted to go through that real quickly. One question was, how are the taxes going to be affected if I'm an AT&T stockholder? Well, what's going to happen is the company is going to go through this spinoff, and then you're going to have a portion of the stock which is going to be attributed to Discovery Warner Media. When that happens, there should be no tax implications whatsoever. Now, if you sell your AT&T stock, you possibly could have some capital gains that you have in there. But if you look at the value of AT&T over the past 10 years, it hasn't grown a whole lot. So you're probably not going to have very much tax implications. But you could have some. So you have to be looking at what your average price per share is going to be. You've been paying taxes on dividends as you go along. If you sell the the Discovery Warner Media, you're not going to have any tax implications on that either. If you want to reinvest it back into AT&T, or if you wanted to invest it over into Verizon, that's up to you. So hopefully that answered your question. If you've got other questions, no matter what platform you're listening on, put it into your platform. I'll follow it throughout the week and I'll answer your questions. Thanks a lot for listening. Please take a moment and watch the disclosure that's at the very end. That's important. That tells you my limitations. But thanks for visiting. And if you're just listening, keep listening and I'll read it to you. Have a good day.